Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Hi, Jim, and here we are Friday. We're looking at the markets and we're talking about them, and I always enjoy it.
And for listeners to Bob's show, tune in to This Week in Money because Bob will also be a guest on that. Bob, first off, we like to start off with listener questions, and we have a question from Butch. Butch's question: what are Bob's thoughts on agricultural commodities looking out the next few years? Seems like producers are getting less for their products, yet grocery prices keep going up and up and up and up.
Yeah, let's do this last part of that one, because years ago I looked at history. You can get history of agricultural prices and agricultural wages and costs, and you can get them back an amazing way. And it's not often when you get, for farmers, good prices and reasonable costs at the same time. It's a very difficult business, but it's been modernized to, well, the efficiencies are incredible. And then so the answer to the second question about producers are getting less, it's been frustrating for hundreds, if not thousands of years of farming history. So, and then the other one is, what are the thoughts on agricultural commodities now and for the next few years? And gosh, I look at that chart, GKX, and it's an ag commodity index, and a few years ago I thought it looked like it's bottoming, and it still looks like it's bottoming. And a couple of months ago, Ross noticed perhaps a low from which you'd get a rally. They got a bit of a bounce. But what has been going on is that in North America, which is very important for growing of the grains, soybeans and wheat and corn, the growing season has been shortening. It's later in cooler springs and earlier in cooler falls. So I'd figured that, and this is attendant to a bit of overall global cooling going on, and which the authorities wouldn't agree with, but nonetheless the growing season has been shortening. And I thought that this really would drive up the grain prices, but I didn't write on it, but it hasn't been happening. What's happening is that you have highly efficient production of these basic grains in many other parts of the world, where making the North American production less important. So I've been disappointed. We haven't called really for, other than a bounce a while ago, but we haven't really called for a rally in the grains. But I've been disappointed that there hasn't been one, because I thought screwed up weather might do it. But the point here is there's so much production in other climate regions.
So, Bob, we have another question. This one comes from Berkeley. Justin Lee asks, Bob and company, I guess that's me and our executive producer, Tom. Bob has been saying for years that the Russian gold miners will occur when the real price of gold increases over operating costs like oil and labor. Seeing this is the case now, I'd like to report I do not even recognize some of the exploratory miners I own. They've all been snapped up by people like Hecla, Newmont, Osisko, and merged with others. There are still lots of smaller outfits that have also moved a bit with gold price, but I find a lot of explorers are limited by the idiocy of management and over-dilution. Where does Bob turn to research explorers? I've done okay, but some of these miners just crucify you when they come up short.
Yeah, Justin, good question. I'd say that I really like the exploration side because I originally took a degree in geophysics and did spend some fabulous summers in the field and always like exploration stocks. But you got to consider that you had the big blow-off in precious metals in 2011, which was measurable blow-off. I mean, you had all our technical tools were kicking in, and our advice was that it was dangerous and a bear market would follow. So until the last year or so, when gold's real price bottomed, and we took a gold index and divided it by the S&P, and through that long period since 2011, there's been the gold sector really underperforms the S&P, and as we know, it sector disaster. I just think it hasn't been. Just conclude that one. We've had a terrific rise in the real price, and we've had a terrific rise with gold stocks, the senior golds, outperforming the S&P. It's been wonderful. It's the way it should be working. But as yet, you're not have a new field of juniors, but they will be there. I'm working on one myself, but it's been a long desert for juniors, and it's coming back to life. So with the full bull market in gold, you'll have the seniors, the medium-sized one, and exploration juniors flying. The gold sector is somewhat overbought now, but our advice is that on the dips you would buy the sector, and it's been good for us, this sector. So, but a good question, thanks.
Right, and for doing research, nobody researches stuff more, I think, than John Kaiser, who does Discovery Watch here on Howe Street. So perhaps
Kaiser is very good at covering developing exploration stories.
Absolutely. So that's my suggestion, because he said Bob and Company, so I thought I could jump in there.
Get in touch with Kaiser.
At KaiserResearch.com. We'll have more with Bob Hoye right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Bob Hoye. One of Bob's favorite headlines of the week. Investors in gold and investors in bonds cannot both be right. Can they, Bob?
Whatever Mother Nature wants to do, she will do. The gold people have an idea that the cost of owning gold, the cost of leasing gold, whatever you want to call it, it relates to what the general interest rates are, and I don't pay attention to that. We just look at credit markets and technical analysis of gold itself. And but the irony is that if you take a look at gold's real price as deflated by the CPI, and it goes down in the bubble, which we mentioned a little while ago, and then in the post-bubble contraction it goes up. And we didn't mention that what happens to real or deflated interest rates is that they go down in the bubble and then go up in the post-bubble contraction. So the rule of thumb about rising interest rates curbing the gold's price is not sort of accurate. And when this post-bubble contraction gets a little more severe, you're going to find real interest rates rising and the real price of gold continuing to rise. So actually, gold's real price rising now is in line. It's a characteristic of the contraction. And the rise in real long interest rates isn't really distinctive yet, but I think it will be there.
We'll be taking a look at what's going on with tourism in Europe when Bob returns.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, Spain, of course, depends on tourism to power its economy. The virus crisis destroying that business over the summer. Can places like Italy, Greece, Spain that have been on the lower end of the economic scale in Europe recover if they can't get the tourism they need?
Oh yeah, that is very difficult because people in England, for example, just love to go to Spain and Portugal and other places in the Mediterranean for, the lovely warm weather. But this has changed. There's two things going on. One, you've had the Wuhan flu, scary enough and being over-promoted, I think. But at any rate, people are not traveling on that reason. And then underneath it, you have what could be soon called a post-bubble contraction. Certainly the economic numbers coming out now are dreadful and have been so. But so the people just may not have the wherewithal to travel as they used to. And of course, there was a time when only the upper classes went touring. So, major financial event over the last year to the downside, and I don't think there'll be much recovery at all. And then also with Spain, for example, you got all of those number of condominium resorts where people, outsiders, are owning them, or other people are owning them and renting them to tourists. So it's a changed world, and I think it's going to be changed for quite a while.
We also have another question. This one here is on the gold-silver ratio. And our listener, Justin Lee again, thank you, Justin, says, I read that Bob Hoye cites the gold-silver ratio as a very reliable indicator of credit stress in the market. The ratio has fallen to about 83 from its high of 124. I know Bob calls it a proxy for a credit spread, but what's his take on the actual relationship between metals? Is gold currency or a store of value? And silver is resigned to being just an industrial commodity for the most part. Well, is gold currency and is silver like steel and aluminum?
Well, it's somewhere in between, Justin. Thanks for this question as well. But gold really, underneath it all, is money and has always had a higher value than silver, even though the silver bugs for decades have been saying each year there's a shortage of silver. But anyways, no, the market forces are incredible, and you can see it on a daily basis sometimes where on a day that's a setback in the financial markets, the gold-silver ratio will be up. So I don't know that anybody is like the head of a trading desk that says, oh, this is what we're going to do today. I doubt that, but it just works that way. So I don't try and explain it. I just watch it, and have been for a long time now. And what we're watching now is that, of course, the ratio came down once the immediate panic was over, and then I think somewhere in here it'll maybe turn volatile, and that would lead to the next advance. And even just the gold-silver ratio turning volatile is anticipating problems down the road. So, yeah, it's been a good guide for us, and we'll continue to use it.
Also, we have a nice email from Bert Winkenbach in Belgium. Bert says, sorry I've been late getting back to you guys. Thank you for answering my question about the Japanese credit bubble in the July 17th podcast. He said he spent several days in France visiting the D-Day cemeteries, especially the American cemetery at Omaha Beach. He also notes that a lot of Canadians gave their lives to liberate Europe, the Dutch especially appreciative of the efforts given by the Canadians. It's a sobering experience what the price is to regain freedom, but that freedom is now voluntarily being given away to the European Union in the U.S. and Canada. It's not much better. Did those heroes give up their lives for nothing?
Oh, Bert, that's a sad one. Yeah, I was growing up during the war. I was 9 years old at the end of it, so my dad, his two brothers, went off to war, and fortunately they came back. But as a kid then, we were taught that the war was to defeat, they made it personal, dictators in Europe, such as Hitler and Mussolini, and dictators in Japan, and dictatorships. So the war was fought for freedom. And then the good side, the freedom side, won. And now, internally, in each of these countries, Europe has never really been fully dedicated to freedom as much as the English side has with the Commonwealth countries and well as the U.S. So it's very sad to see in each of these countries parliamentary democracies, and in the U.S. a republic, where people inside are out to deliberately destroy the economy and the middle classes so that they can impose control. And it is the age-old game of threatening with fear. As a matter of fact, fear has become a government growth industry. And for years now, the fear has been on the climate side. And then more recently, the fear on an influenza. So, and then people will surrender their freedom because the state is going to surrender, it introduces the fear, and then the state says it can prevent the harm from the fear. So it's a classic in libertarian side where you give up your security to prevent something bad happening. In this case, it's just imaginary. So they are trading freedom on the promise that the state will fix the fear, and the state invented the fear. So it is, for me, it's a very sad situation. And the barbarians have not been at the gates. They've been inside all the way along. they are bureaucrats, of course, who always like more power. And then there are politicians who will play the game. And another sad side of it is that you do not have a critical media out there. All the journalists, most of the reporters, most of the press have been on the big government bandwagon. So you have had the concept of checks and balances within government. You have a judiciary, and you have a legislative, and in the U.S. you got the executive. And then you also, what they used to call the fourth estate, where the press is there to criticize whatever government is doing. But no, this media does not criticize. It celebrates any big intrusion by the state. So it's a very sad situation. But I think there's reason to suggest that this in-your-face and in-your-wallet government is becoming too much. Folks are getting fed up, and the last successful popular uprising was in 1989 in Eastern Europe, and ordinary folk just got fed up with it and shut down an authoritarian state. And ironically, at the time, the ordinary person in Eastern Europe was unarmed, and his government was very much armed and wasn't hesitant or had a history of using those arms, like with the Prague Spring in 1968. Russia sent in troops and tanks and machine guns and murdered protesters. So anyways, I think for the ordinary citizen, it's all now becoming too much, and it's time to start disbelieving the touts about their fears. They're manufactured fears. Climate is the biggest one, and more recently the most acute one is the fear of yet another influenza. So I think, Jim and our listeners, I can be positive about this, but without putting a date on it. At some point, the public in North America and England and perhaps parts of Europe will say, enough of you idiots, and it's time to get out of my life. So hopefully, maybe this fall, we could see a step towards that.
Bob, thank you so much for being on the show.
Jim, I ended up doing an editorial that we look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.